Welcome to Crystal Specialist Finance latest webinar. Today I have the great pleasure of being joined by Hope Capital's Wayne Lee, Together's Paula Purdy and United Trust Bank's Paul Del Monte, where we're going to talk to you a little bit about bridging and commercial finance. But to start with, my name is Chris Corns and I'm the Operations Director here at Crystal Specialist Finance. Stay tuned to the end of this for a live Q&A. At the bottom of your screen, you should have a little Q&A button. So do please click on there, ask your questions during the webinar, and we will do our very best to respond to you either during or in the live Q&A afterwards. So first of all, a little bit about us. So Crystal Specialist Finance, we are specialists in specialist finance. So that's bridging, complex buy-to-let, commercial, development, seconds, and residential. We are dedicated to the intermediary. Service is our obsession. We are multi-award winning, over 80 lenders on panel and a very experienced team, as you can see there. And there's a few of the most recent awards that we've won as a business, which we're very proud of. We're also very proud of our health and wellbeing campaign. It's a very difficult time out there at the moment, and I'm going to come on to that a little bit shortly. So we're running a Crystal Solve Stress campaign. We're promoting the awareness of mental health and wellbeing in the intermediary sector. So we're working with Mind, we're providing helpful advice. And over the next 12 months, we'll be holding a number of events, a number of articles, a number of promos that are coming out in order to try and raise the profile of this and point out how important it is. We're all in a difficult situation. We're all working from home. We have less interaction with colleagues, with customers. So it's very important that we stay on top of our own mental well-being. Our current campaign is if you send in an application that completes prior to the end of this year, then you get one of those unique stress relieving crystals, the amethyst, that will be sent through to you. A number of those have been issued already and are proving very popular. So don't miss out on one of those. Get your cases in. Let's get them wrapped up pre-Christmas. So as I mentioned, it is a very difficult time at the moment. And there are things that are out of our control and there are things that are within our control. And I think it's very, very easy to get stressed and to get panicked and to get worried. There are certain things that as a business we can control or you can control. So when it comes to applications, lender timescales, the majority of lenders will tell you are not where they want them to be. This is due to a variety of factors and there's nothing that you or I can do to fix that currently. However, there are a number of things that we can do to ensure that our cases move through that process as quickly and smoothly as possible. So any terms that we issue, first of all, are based on information that we've received. So the key there is that we get that information quickly, clearly, and we get the full picture. So ensure as much information is provided to us and or the lender as possible. This means that when things get found out later down the line, and if there is anything there, it will get found out, we can cross that hurdle at the beginning of the transaction rather than at the end. Provide any relevant documentation from the start. We know we're going to need ID, we're going to need certain forms completed, so let's not wait until the offer is issued to start collecting those in. Let's get ahead of the curve, let's get those and get the application moving. Manage expectations with your clients. Things are moving slowly. There's absolutely no winners in telling customers that things will happen today, tomorrow, in 48 hours, when the lenders are telling us it's going to be 5, 6, 7, 10 days in order to get things assessed. So it's really important that we manage expectations right from the beginning of the transaction. And that can mean changing lender. We'll see a case study shortly where we've completed a bridge within 48 hours. If that needs to happen, let's have that conversation up front and we can facilitate that. Ask the client as many questions as possible at the start. Get the ID documents, get any other thing that you think is going to be relevant to the case. It's a commercial mortgage or a bridge. We're going to look at the information in a second, but ID, understanding your customer, the KYC element is all the same. So therefore, let's get that boxed off nice and early. And then the biggest one, be quick to provide any further info or documents when they're requested. We don't ask for things that we don't need. So if a lender's coming back asking for a particular document, let's get that in quickly. You'd be amazed how many people ring us up demanding to complete tomorrow when there's still 5 or 6 documents outstanding from their side that they haven't yet provided. So again, let's make sure that we're getting these things completed and in as quick as possible. I'm sure you'll agree there's no magic formula there. There's nothing there that's rocket science. It's just let's make sure that we can all be as efficient as we can and give the lenders the best chance of getting these deals done. And for doing so, the commissions are very healthy, as you can see there. Taking some averages and some typicals, 3k on a bridge, 1.5 on a buy-to-let, and just over 3.5 on development finance. So for putting the work in, for getting the leads, for getting them structured, it definitely does pay. So moving on to bridging finance. Bridging, typically it's a short-term loan arranged quicker than a standard mortgage. It's generally no more complicated than that. It's useful for many situations where the aim is to buy time. That's the key element. You're either converting something, you're turning something into something else, but you can't yet get to the end state. So that's where a bridge is a very versatile and affordable option. So some stats on what bridging market is seeing at the moment. What are bridges being used for? And as you can see from this chart, the majority of bridging is for investment purposes. It's for chain breaks, it's for refurbs or business use. The core elements haven't changed. When lenders move slowly, bridging picks up the pieces. It swoops in underneath and cleans up from there. So it can be used for anything. Purchasing an investment property is still a very popular reason for using bridging loans. There are some bargains out there. There are properties, you can still get undervalued purchases. You can still get properties in need of a refurb that the client can either tart and turn or flip, or even just do a refurb and add them to their own portfolio on more mainstream finance. So bridging certainly allows clients the flexibility to do that. And bridging's also quick. If you look at, there's some horrifying stats on there from the Sunday Times in a recent article. If you think about the upcoming end of the stamp duty holiday, which is March next year, that's not a huge amount of time in real terms in order to turn around purchases. So therefore bridging may become a more prevalent option moving forward. And there are some great advantages to bridging finance. It is quick to arrange. The credit criteria, the income, the affordability from lenders is generally much more flexible. Any type of property can generally be used as security. Any condition of property can be used as security. Any construction of property can be used. And you can use a multiple of all of those. So it does provide a really flexible solution. And at Crystal, we are specialists in bridging. We win a number of awards every year for the deals that we get done, all voted for by peers. We do love a bridging loan. So if you do get a quote from anyone else, then send it to us to have a look at. If we can't beat it, we'll at least match it, and we'll do a lot of the work for you. So moving on to our second love, commercial finance. Commercial mortgages, they're no different to standard mortgages. They're just secured on something different. It's a long-term loan to provide the funds to either purchase or refinance a commercial property, a business premises. There is more risk involved, especially at the moment. So be aware that the lenders are asking more questions in order to secure the better rates. But we can lend generally to any type of business, startups, blue chips, semi-commercial, fully commercial, anything in between. Always worth a conversation to see what we can do. So some of the things to remember when you're looking at a mainstream commercial mortgage. Bank statements tend to get looked at in much more detail. If the client's running a business, full proof of income is going to be needed. So we want to see SA302's accounts generally on there. And they could be between 1 and 3 years. Due diligence is much more intensive, especially during these COVID times where the lender wants to see that the business is viable, it's sustainable, and that the people behind it have thought it through. We can help with all of this. If the clients can provide it, excellent. We can move forward with some really low rates currently. If they can't, we've got lenders that will look at alternatives there as well, and those rates are a lot better than you'd expect. So definitely pick up the phone, speak to our guys, and let's get these cases looked at and moving forward. Another area that gets overlooked are homeowner business loans, where you can do a second charge on a home for business purposes. So there might be bags of equity there and the business needs some money to tide it over, a bill, working capital, any tax bill, anything like that. So it's definitely worth considering all of those options when you're looking at finance solutions for your client. And again, a number of businesses have taken out, you'll hear them referred to as C-bills or BBLs, coronavirus loans or bounce back loans. It doesn't mean that they can't borrow money. It just means that lenders will look at them in a little bit more detail. What were they used for? How's the business been impacted? How will the repayments when they start next year impact the business cash flow? So if you see them, let's have a conversation because we've got some excellent products available to suit those as well. A couple of very quick case studies for you. We have a 48-hour bridge on the system there. This is one I briefly touched on earlier. Came into us on Thursday afternoon. Desktop valuation, was carried out. By Friday lunchtime, all of the underwriting requirements have been satisfied. Binding offer has been issued and sent out. The client completed the document same day and returned them by recorded delivery. Got to the lender on Monday. Funds were released. Absolutely brilliant outcome for the client from a situation that they couldn't do anything about. The property was about to collapse, the sale was about to go, they needed to get this fixed. And then a couple of commercial case studies for you to have a look at. Again, all of these are COVID case studies, as we're calling them. They've all happened in recent times. 75% LTV purchase of a sitting tenant on an industrial unit, 4.42%, which saves the client £700 a month versus the current rent. So he was buying a property that he currently rented. A £2 million loan on the purchase of a large commercial warehouse, showing that lenders do have appetites at higher loan values at the moment as well. And their commercial investment purchase in Manchester at 2.15 million. The combination here of high loan to value and a high loan amount. So again, there are some excellent deals that we can get over the line for you. Key thing for us is let's have a conversation. So you can get in touch with the team. You can either call us, email us, you can visit our website, you can book in virtual meetings with our BDM team. Any way possible, we can do Zoom, Teams, whatever it's going to work. All the key here is that we have a conversation, we can understand the deal, and we can try and get a solution put together for you to discuss with your client. So thank you for listening. I'll pick up again at the end with the Q&A. We now move on to Wayne Lee from Hope Capital.
Hi, it's Wayne Lee from Hope Capital. I'll start with a quick snapshot of our lending policy. We lend from 50,000 up to 5 million. Our maximum loan to value for residential is 75%, and our discounted rates start from 0.54 for serviced loans, and our standard rates from 0.83. We lend for any legal purpose, for example, auction purchases where a quick completion is required, properties in need of refurb, refinance, equity release for any legal purpose, and rebridging, for example, where there have been project overruns and or the existing bridge is coming to an end. We also lend in non-standard situations for BVI companies, foreign nationals, etc. We pride ourselves on being quick, flexible, specialist and transparent, and we're a principal private lender with expert knowledge of the property and finance markets. We'll always try to do a deal and have a reputation for providing solutions when other lenders can't. Transparency is crucial, and therefore we're transparent right throughout the process with fees, interest rates, and the process we'll go through, and there won't be any nasty surprises. Bridging is what we do day in and day out. Main reasons for using Hope: we focus on service excellence, speed, transparency, as I've said, the ability to speak to decision makers for openness and quick decisions, cases outside of criteria referred directly to the MD and the CEO for immediate review. We're principal lenders, so we're not bound by the constraints of high street lenders or some lenders which are funded by institutional funding. We have fully flexible repayment options with retained interest, service, or a mix of any combined, and each deal is evaluated on its own merits. We have an experienced team with property, bridging, finance and investment knowledge and decades of experience. And as well as lending on residential property, we lend on commercial, mixed-use property, and we'll also lend on land with or without planning. As I said earlier, our rates start at 0.54 and we charge no exit fees on our standard products. We also have a zero fees option, which allows a credit to maximise the day one loan and reduce any initial outlay. Terms are up to 18 months with a 3-month minimum term, and we will lend, as I said earlier, on residential, commercial, mixed use, property and land with or without planning. We will also provide up to 100% of build costs for refurbishment products, with upfront lending again to 75% LTV on residential. And we'll also lend up to 100% of build costs for refurbishment of commercial and semi-commercial. We are happy to consider all credit statuses from light to heavy adverse, including clients who've been made bankrupt or had RVAs. And on a rebridge product, we'll lend up to our published loan to value, and some lenders do reduce when there's a rebridge. We'll, as I said, lend right up to our normal loan to values. As I mentioned earlier, we can service, deduct interest, or do part and part. And from a valuation point of view, we can also offer AVMs, drive-bys and desktops for the cases at the lower end of the loan to value scale. Got two case studies for you. First one was where somebody needed a speedy completion using the new valuation model. It was a residential property located in Kent, and it was purchased at auction, so the borrower needed to access the funds quickly to avoid losing the deposit. We used an AVM to issue the loan for 163,350, and the loan was at 55% loan to value. We did it in just 7 working days from inquiry to completion. The AVMs enable valuations to be completed significantly faster than a full valuation, and with the tight timescales that are imposed by an auction purchase, the can-do attitude is what we were known for. We work directly with the borrower to speed the process up further and call them directly to complete the application form with the broker's permission to ensure all the necessary information was in place. Brokers for the loan were impressed by the speed and the willingness of Hope to go the extra mile. Second example, our borrower wanted to purchase a residential property for £250,000 using our flexi loan. He wanted to undertake a light refurbishment and then exit the loan by refinancing within a 6-month time frame. The broker asked for a comparison between a standard loan and a service loan, as his client was looking for maximum funds on day one. In this instance, the flexi loan was able to give him an extra £3,969 on day one, which gave the customer extra funds towards a refurbishment. Choosing the flexi option also meant that the monthly payments were spread over the full term of the loan at £740, as opposed to £1,480 on a standard service loan. This meant the repayments were more affordable from the projected £950 a month rent, and also enable the client to establish a payment history and readiness for the buy-to-let application. Clients had sufficient income from other properties to cover the interest while the work was being carried out on the property. And I'll finish with our 2 limited edition 70s products, which are available for application submitted during November. And they are purely for residential property, the Hope 725 and the Hope 75. On the Hope 725, we'll lend up to 72.5% loan to value at a rate of 0.725 a month. Loans from 150,000 to 725,000 and no upfront solicitors undertakings. Maximum term on those is 12 months. And on the Hope 75 product, we can lend up to 75% loan to value at 0.74 a month. The maximum loan on that one is 575,000. Again, we'll take applications from clients with all credit statuses. And again, happy to lend for purchases with light refurbishment. On that product, there's no heavy refurbishment, but happy to lend for light refurbishment purposes, cosmetic, kitchen, bathroom, that kind of thing, refinance of existing debt and capital raising. So I hope you've enjoyed the presentation. Please submit any inquiries to Crystal in the normal way, and thank you for listening.
Thank you, Wayne. Great presentation. Your next presentation is from Paula Purdy at Together.
Good morning, I'm Paula Purdy, Regional Account Manager for Together. We're going to run through a presentation now which covers off our return back to the market, why you and your clients would use Together, some of our USPs on our commercial products, bridging. We're going to have a look at how you'd use bridging and some of the opportunities, and a summary at the end, which does include a case study for a recent bridge that completed within 48 hours. So if we look at how and when we returned back to market, so we've returned, relaunched on the 14th of September with a much more simplified and straightforward product range, very much easier to understand what type of products are on offer with Together. Also, we looked at changing how we distributed to market. So we made the decision to work with a limited panel, and I'm delighted to say that access to Together can be through Crystal. They're one of our most experienced partners at working with us. Now, if we have a look at these three areas and how we adopt a very common sense approach to our lending, we'll first of all talk through status. Now, what is actually status in terms of your client? So it could be the age of the client. So we will look at applicants from the age of 18 to 80. We will even go beyond the age of 80, provided the case, for instance, was a buy-to-let and was self-financing. There really would be no upper age limit on that. We lend to UK applicants, but we also can consider lending to non-UK residents, for expats, etc. We also lend to individuals, or it could be a limited company, it could be an LLP, a trust, etc. Those all can be considered as well. And in terms of status, we also look at sort of your credit status. So it would be perhaps maybe if you've had any credit blips. Now with us, we're a little bit different, and what we concern ourselves is with the last 12 months credit for the client. Anything beyond that is not something we would be particularly concerned about when we look to underwrite the case. With regard to income, we have quite a unique way of reviewing the income. We will take any income that you earn, so it could be from a number of sources. So it may be you have two jobs, you could be employed during the day and then you work on a self-employed basis in the evenings. So we will take both those incomes. It could be that you are a 0 hours contract employee. Your income could be made up of any sorts of ways, benefits, anything at all. It could be income from property. Whatever you earn, provided you can evidence it, we will take it as income. If we look at property types, we will lend on anything provided it's got a title number. So if the property is registered at Land Registry and has a title number, and provided it's not a place of worship, we can consider it. And as this slide shows, there are quite a large number of different types of security we will lend on, from your Airbnb to your commercial unit, land on its own. We can see stables, their livery, blocks of flats. We'll look at pubs, commercial units. It could be mixed use units. So it may be that you have a shop downstairs with living accommodation above. Look at HMOs, non-standard construction. So if you have a property, you can see on the top right there, something that's concrete and unusual construction, we can look at that. It could be something where you've tried to place the case elsewhere and the valuer has made some unfavourable comments in terms of lending. It possibly is a property that we can consider together. So it's definitely something worth discussing with us. So if we go into a little bit more detail about the commercial loans and mortgages, we will lend on a capital and interest or interest only basis. Quite unusual for commercial to be able to consider interest only, but we can look at that. We're also very flexible on the affordability calculation. So where the property is actually occupied by the client or we're needing to use outside income to support the application, we do look at it slightly different to a lot of our competitors. So what we will do is, as we discussed before, all that income that you earn, be it from whatever source, is all put in one pot. We take the net income, divide it by 2, so we'll take 50% of that. And so if we had somebody with 20,000 a year net income, we take 50% of that, which obviously equates to 10,000, and then we deduct any secured payments they've got to make. Once those secured payments are taken out of that 50%, then there needs to be enough left to pay our loan. So it's as simple as that, nice and straightforward, and it's a really easy way for you to understand how we calculate the income. And as you can see there, that can be based on any of those types of properties. And what I'd also say is we have pubs and restaurants and takeaways there. Obviously, we're living in a slightly new world now with COVID. And whilst we say we will consider those businesses, and we do, we would need to look at it with a COVID lens. So it may be, for instance, I received an inquiry yesterday for a pub. The pub doesn't serve food, but what it has done is it's got an Uber Eats contract and is now going to do takeaways, and it's working at actually changing the pub into being able to serve substantial food. And it's in a tier 3 area. So it's something we could still consider, but there needed to be some backup to support that. Also with something like that, it may be that we want some commentary from the accountant just to confirm how has the business continue to trade during COVID? What things did it do to offset any threats of the COVID virus, along with a small business plan? But it's certainly something we would look to lend on. So moving on to bridging now, this is a slide from Ernst & Young, which really did a bit of a survey on how and what reasons people would use a bridging loan for, and no great surprise there that 52% of those, it was used for refurbishment, 20% for business purposes, and 14% for auction purchase. So on the refurbishment side, that could be anything. So why did the customer want to refurbish the property? It could be they're buying it, they want to do it up and sell it on, and they know by doing the minimum amount of improvements to the property, they'll make a good return on the property. It could be that they need to change the format of the property. It may be that they want to change it from a 2-bed to a 3-bed, and then to put it on a term deal that would then be part of their portfolio. So it gives them the option to buy the property, do the refurbs, and then move it on to a term application with either ourselves or another lender. With regard to business purposes, 20% of those took it for business purposes. Now, that could be anything from paying a tax bill. It could be the fact that they want to buy some stock for the business. It could be any sorts of reasons, but I think sometimes people forget that that's a massive opportunity for customers, that they can look to borrow for business purposes on a bridge basis. And finally, auction purchase. I'm sure we've all had times where we've watched Homes Under the Hammer, and 14% of those spoken to took it for auction purchase. I would say the key thing with an auction purchase is for your client to have the finance in place before they go to auction. So working along with Crystal and ourselves, you can send the inquiry through, get it agreed prior to them going to auction, and the client is confident that when they do bid on a property, they do know they have the funding available to complete that purchase. So if we look in a little bit more detail at the bridging finance, so we will lend on a regulated and unregulated basis. So for the regulated loans, you're looking at a loan of 50,000 up to 1 million at 60%. The maximum age would be 85 on that product. And also we only have 2 exit options available on the regulated bridging, which is either sale of the property or inheritance. We are quite strict on that, so, and the common one would seem to be the sale of the property. We won't consider a refinance. On the unregulated bridging, it is different. We can consider refinance options, and what we will do to make the process slicker and quicker for you is on a refinance case, we no longer need to see indicative terms from another lender. We will look to see, does it fit on our term products? If it does, that's an acceptable exit for us. So definitely a lot smoother and a lot easier process. As you can see on the unregulated side, we can consider loans from 26,000 to 4 million, up to 75% loan to value, and we can cross-charge across a number of properties. If we look at what's key to any funding is the speed and the service. By working with Crystal, you're working with a very competent and knowledgeable packager who have a great relationship with us and really know our products inside out. Our service is absolutely amazing at the moment, and I'm sure you've seen in some of the LinkedIn posts, etc., about us completing cases in record number of days, etc. Flexibility with product, that is very, very key. As you can see, looking at the products that we've run through, if you look at the status of the client, we'll accept all types of income, types of flips, maybe on private credit, anything like that. Could be an expat, could be an overseas investor, anybody like that. We'll also look at the different types of security, and I think it's fairly well known in the industry how flexible we are on property types, and the certainty of funding. I just thought it would be good to finish with a recent case study, and it's something that has been posted on LinkedIn and been seen in the press, etc. This was a regulated bridging case that completed within 48 hours with Crystal and ourselves. The actual story behind that was we had some clients who had an unencumbered property in Scotland, and they had committed to an onward purchase, and unfortunately the sale of their existing property property fell through. So they still needed to complete on that new purchase. So we lent against the existing property on a bridge basis, and the case was offered on a Friday and funded on the Monday. So the client, given the very last minute pressures they had, were absolutely delighted, and the case could complete. And really a very strong case study to show when everybody pulls together what you can achieve. Thank you.
Thank you, Paula. Excellent presentation. And the final presentation is from Paul Del Monte at UTB.
Hi everyone, my name is Paul Del Monte. I'm the Key Account Manager for United Trust Bank. I cover the Northwest and Midlands area. I just want to start by saying thank you to Crystal for allowing us to present today. We're actually going to be discussing our bridging product. So I'm going to be sharing my screen very soon, and we'll go through our criteria sheet, and we'll go through all the USPs and break down all of the rates. So in terms of questions, we're actually doing a Q&A at the end of the presentation, so please feel free to write down anything you want to ask me at the end, and I'll do my best to answer. So let's get started. So I've just started to share my screen now, so you should be able to see our Bridging Finance product guide. So what I'm going to do is just go over a couple of points, first of all, for process highlights and also for product highlights as well. So the first one is biometric facial recognition. So that's our UTB Nevo app, which actually allows clients to self-certify themselves using the smartphone, which is brilliant. The next point we have is dual legal representation. That basically means a solicitor acts for the client and for the lender as well, which aids speed to completion and keeps the cost down as well. We have automated valuations for qualifying loans. I'll go into the criteria around that a little bit later on. Our product highlights, so our rates start from 0.48%. We lend on regulated and unregulated first and second charge in England, Wales and Scotland. We're flexible on property type, and most applicants accepted, including foreign nationals, offshore companies and trusts as well. So I'm going to go over the rate card here. I briefly touched on it before going through the product highlights. So just to let you know, we're capping our LTV at the moment at 60% gross. So the LTVs down the left-hand side here are our gross figures, which includes all interest and fees. So as said before, we're starting from 0.48%, below 50% LTV. And then moving on from that, so from 50 to 55%, we're at 0.55. And then from 55 to 60%, we're at 0.59. On second charge bridging, anything below 50% loan to value gross, we're at 0.75%. From 50 to 55%, we're at 0.80%. And from 55 to 60%, we're at 0.85. We do consider semi-commercial and commercial property, anything up to 50% loan to value gross, and rates start from 1.10%. Moving on to this grey box here, which you'll see. So just going over how we split what we consider a light refurb and a heavy refurb. So I'll just read it as it says here. So light refurbishments are catered for within our standard bridging product. So just to give you an example, if a client's going to auction, they're buying a property, they want to do a kitchen and bathroom, that's classed as a light refurb, because actually you don't need planning permission and it doesn't fall under permitted development for that. So it's a light refurb, standard bridging rates, which is what we've just gone through. So for any works requiring planning permission or being completed under permitted development rights, we actually would revert that case to our residential property improvement loan, and the rate on that would be 0.75%. What we don't do is actually we don't do heavy refurb on regulated facilities. So if a client's looking to buy a property for them to live in and they want to do a big wraparound extension, it won't be for us. However, if they're buying a property at auction and they want to do the same thing, and that's going to be rented out, so it's going to be a buy-to-let, so making it unregulated, we can look at that one, as long as the clients have got experience. How we class experience for us is where a client has got either 2 or 3 completed projects in the past, the same or similar. So just moving on then from that, we'll go through now what we lend on. So we lend on owner-occupied residentials, so client's residential home, residential investment properties, so you buy to lets, semi-commercial properties, which we briefly spoke about just before. We also lend on non-working farms, property portfolios as well, so we can cross-charge against multiple buy-to-lets. We can also consider commercial property, again, which we touched on, HMOs. We can also consider ex-local authority, land with planning. Now, with land with planning, we do cap our lending at 50% gross. So what we tend to see is where clients are actually looking to obtain a site that's got planning permission, and we get an exit, so by development finance. So development finance will come in, pay us off, and then they start with the build. We do consider grade 2 listed properties and remote and rural residential properties. So moving on then to who we lend to. So we lend to UK citizens and expats, foreign nationals, UK companies and trusts, offshore companies and trusts, SPVs, so your limited companies, funds, executors, and mature borrowers, and we don't have an operation limit on those. So that is actually a very big USP for us. Only 2 days ago, I actually had a call from a broker with a client who was 95. The gentleman was actually selling his 5-bedroom detached house and buying a 2-bedroom bungalow. So the client was selling that one. It's a simple downsize deal. Client's 95, no issues for us whatsoever. So moving on then to legal fees. So the borrower is responsible for paying all the legal fees, costs, and disbursements associated with the loan. For regulated and unregulated loans up to 1 million, the borrower can elect a firm on our panel to act for both themselves and United Trust Bank. So we touched on this at the start of the presentation. So dual representation. So a client can use one solicitor, and that solicitor can act for us as well as them. Now, it aids speed of completion, and also the fee for dual representation is actually the same fee for single rep. Now, if the client's making a purchase, it's an additional £250 on top of that legal fee. So if you compare that towards what they would have actually have to pay if they had their own solicitor, you know, it's quite a big saving. Now, the clients are, you know, it's completely up to the client whether they want to use that. That's absolutely fine. It's optional. We have 2 solicitors on our panel. One of them is JMW, who are based in Northwest, and Lightfoots, who are based down south. So then moving on to key terms. We do have a minimum loan size, but our minimum loan has increased very recently from 75,000 net to 125,000 net. So minimum property value. So we have a minimum property value would have also have increased, because if you think that we're maxing at 60% gross loan to value and our minimum loan size is 125,000, it means you can't have a single security valued at 150. So that actually has increased also in line with the minimum loan size and the cap on loan to value to around about 230, 240,000. We do, however, lower that for multiple securities. So if the client's got multiple properties that they want to cross-charge, each one has to be at a minimum of 100. But obviously, if you've got 2 valued at 100,000, it's not quite meeting that 230 to around about 240,000 total security value. So as long as it hits that over multiple securities, then we're fine. So as we said, again, at the start of the presentation regarding desktop valuations, so AVMs can be used for loans up to £1 million. We have a max 55% loan to value. We have a max 1 million property value per security. And the good thing with our AVMs is they're completely free, which is great. We deal with regulated and unregulated loans. We have no exit fees or redemption penalties. we charge daily interest after the first month. Rolled up interest option. Now that's only really for non-regulated transactions, because for regulated, that rule is governed by the FCA, that they all have to be rolled. So if the client's looking to pay the monthly interest, then we'll just need to see a proof of income to make sure they meet affordability. Completion fee 2% paid on drawdown. We have an admin fee of £295, again paid on drawdown. And the term, so regulated, we go to the maximum of 12 months. Again, that's another thing that's governed by the FCA. 12 months is the maximum term for regulated, and then we can go up to 36 months for non-regulated. So for locations, again, as said at the start, we lend in England, Wales and Scotland. Scotland, we are postcode specific, which you'll see here. They're basically the main cities in Scotland that we lend on. So that concludes the presentation. I hope I've been crystal clear, pun intended, during the presentation, and I believe we're going to move on to a Q&A now. So hopefully you've got questions for me, and I'll do my best to answer them. Thank you very much for your time.
Thank you, Paul. Really enjoyed that presentation. Thank you all. That concludes the presentations. I hope you all picked up something from that. Now we can move on to the live Q&A.
Thank you for that, everybody. I hope you all found that as interesting as I did, and particularly like the handover there from Paul with the pun at the end. So thank you for that. We've had a number of questions coming in, so we'll get straight onto those. Actually, first of all, can you see the poll results that have appeared on the screen there? So this is something that we have been pushing in the media quite a bit recently, where we're highlighting the fact that things are very different now when people work from home. So it's important to remember that that work-life balance is still important, and that we need to make sure that we're not living at work as opposed to working from home. So keep an eye out for those. These are all being pulled together, used as a bigger study that you'll be seeing in the press very shortly as well. So thank you for everyone that's answered on there. Just having a quick scan through those at the moment. And so what is put on there is that we're looking at 36% of people are saying that they've got a satisfactory level of mental well-being currently, 45 good or amazing, and then 20% of you are saying that your mental health is of concern currently. Keep an eye out for the different media posts that we're putting out. There's some hints and tips in there on how to help during this period as well. So the first question that we've had through is regarding valuations. So what is an AVM? Hopefully that's been covered off during the presentations, but basically a desktop valuation, an automated valuation model that lenders can use to make a lending decision. This is something that was quite common during lockdown, lockdown one, when valuers had issues getting out to properties and couldn't get in to see them. I think we're not seeing so much of that as an issue at the moment. I think Connell's reported yesterday to one of our buy-to-let lenders that they're currently at 4 days. That's not too bad considering where we were previously. Obviously, just things to be aware of for you clients are that valuers as well as tenants may be isolating, so that can cause delays on valuations from there. Just make sure that where AVMs are available, we're certainly looking at that as an option now to speed things through. And lockdown 2 so far is appearing very different to the first time around. So question for the panelists then, do you see any difficulties this time for lockdown 2? And are there any reassurances for the brokers that have tuned in? I think we'll go in reverse order this time. So if we start with you, Paul.
Yeah, no, I don't see really any issues at all. I mean, we actually have been having updates all this week from valuers and, sort of just updating us really, just giving us the feedback to say, currently at the minute, we don't have issues. I think the thing during lockdown, as well as, as what we discussed on the presentation, AVMs was a fantastic tool for us, to be able to get cases still completed. And it was great, because we were able just to do a desktop valuation and carry on as normal. So it was a fantastic tool for us. We were having people still, showing initiative and, even Skyping, clients going out to the front door, and the clients sort of Skyping as they go around the property as well. So using technology to its best, really. But this time round, again, I can't really see much of an issue unless we start seeing it be extended. But I think valuers have kind of gone over that period of being unsure and uncertain. But like you said, I think it depends on if that client is self-isolating, then there may be some issue. But again, case by case basis, isn't it? So.
Yeah, thank you, Paula.
Yeah, I think what I'd say is that I think all of us as a country are better prepared for lockdown 2. I think last time it seemed to come round so quickly. I think we were all maybe a little naive how serious the pandemic was and how much it was going to impact on businesses. So together we've really learnt from what happened in lockdown 1. We spent a lot of time behind the scenes improving process and being set up for lockdown 2. There could be a lockdown 3. I think this is the new way, unfortunately, we're all going to have to learn to live. So no, I don't envisage any issues really at all this time. I feel confident that we'll be able to manage the situation better. The only thing might be there might be a little bit more of a delay perhaps than looking at stuff. We might go from 24 hours to 48 because of the staff working remotely, but I don't see that being a common trend. It's just being mindful that we have got some challenges in terms of that. But I think we're all set up and geared and raring to go and wanting to do business.
Excellent. Thank you. Wayne?
Yeah, I think I would echo both of those comments, really. I think the government this time have made it clear, which is a big difference, that they don't want the housing market to be affected where possible. And I think, as Paula said, people have geared up this time. We've had a bit more experience of it. And I think the valuation companies are the same. From a personal point of view, we're still busy. So I think this time we'll be largely unaffected compared to last time. And whereas we saw lenders shutting the doors and pausing lending previously, I don't think that'll happen this time. So yeah, I think it's something we've just got to get used to and crack on, really.
Yeah, I think most companies have adapted already to the work from home model. As you can see from our backgrounds at the moment, we're all currently working from home, except maybe Paul.
I'm in the office. I'm in my office.
Yeah, so it's something that we're all used to now, and it's just, as Paula said, it's just a new way of the world, isn't it?
Yeah.
Question that came in is, how is demand for bridging at the moment, and is bridging still available quickly? So I think Paula will start with you for this one.
Yeah, definitely. If I look at the inquiries I receive daily, probably 80% of them are for bridging. And as you guys at Crystal know, we're very competent at bridging. And looking at our service, we had a couple of cases that we completed last week in 3 hours. I'm delighted yesterday, another one that completed in 3 hours. So where I thought it was a little bit of an unusual thing for us to do, it seems to be the norm with us now that we can complete speedily. I think it's key. It's back to my presentation. It's everybody working together. And I think sometimes there's a lack of understanding that as long as the client plays ball with the lender and the lender has the documentation and you, the introducer, can obtain the information, we can all work together and really have a great case that pays out quickly. So I'm very confident with the bridging, and we know we can deliver service wise.
Wayne?
Yeah, I think that the all of the funding is still in place. Like I said, I don't think we'll see lenders pulled out of the market anymore. So that's all good, and I think we'll just carry on as we were. From a speed point of view, we don't have any issues at all. We're still processing deals as quick as we normally would, and as you pointed out before, I think people are more used to working from home now. That has been streamlined. People have had a chance to get used to it. So I think with the way technology is today, I don't think that there's any need to particularly be in the office to make sure that things are done quickly and efficiently. So yeah, I think, to be honest, speed wise, I don't think we'll be affected at all.
Excellent. And Paul?
Yeah, I mean, the demand for bridging at the minute is massive, and it's growing all the time. I think a lot of that is to do with the sort of rental yields people can get now off investment properties and things like that. That's really driving the need for bridging finance, because if you think about it, the more people looking to obtain property and looking to get these things quickly, you need it done quickly. That's where bridging comes in and can help. The banks aren't giving you any return for your funds really at all. Gone are the days where you can keep it in a savings account and earn a decent percentage. So people are looking at that alternative route, and the highest yields are in rental, in property. So if you're buying an investment property, instead of having 1 or 2 people going for that same property, you've now got 20, 30 people going for that property, which is driving the demand for bridging finance, because everyone wants to do it quickly. Everyone wants to beat each other. So I think that's where that my opinion anyway, that's where I think bridging has really come into its own because of that. We've obviously been open during lockdown through lockdown 1. We've been lending throughout that process, and obviously where multiple lenders have shut the doors, obviously there's only one channel where all those cases can go to, is the lenders that are still lending. So obviously our SLAs did take a hit, understandably, so we were still within timeframes, still meeting deadlines. So only last week we completed a deal within 8 days, and still having that massive pipeline still from throughout that time where there wasn't any lenders in the market, that is still a very good turnaround time. So that's my thoughts.
Excellent, thank you. And I think you've just touched on part of that there, Paul. We've had a question about marketing these loans to clients, but I suppose as a bigger question, what opportunities do you think exist for brokers within bridging currently? I think we'll start with you, Wayne, this time.
I think the opportunities for brokers are large. As Paul was saying, the banks really are not looking to lend. They never do when there's a sniff of an issue. So I think that the opportunity for brokers is definitely out there to take advantage of that. And as we know, the bridging market is very strong and seems to be getting bigger and bigger. There's a lot more people dipping their toe in development and like refurb and turning property and that kind of thing. So I think from that point of view, there is a large demand. And I think the other thing for brokers is, if you're going to arrange a mortgage or a term loan, they can quite often take a fair bit of time, whereas with bridging, can be turned around quickly, they can be paid quickly, and everybody's happy.
Okay, thank you. Paul?
Yeah, so it's an interesting one actually. I think nowadays what we're seeing is development exit. So development exit seems to be a hot topic at the minute. I think what's happening now is property's taking a little bit longer to sell. So if you think about it, where you've got a development facility, it's for 12 months. Instead of it taking 3 months to sell, it's actually taking 6 months to sell. So what we're seeing a lot at the minute is where developers are building the properties, it's taking 9 months, then they need that marketing, that additional 3 months on top of that to actually get the property shifted. So we're seeing a lot of marketing around that development exit currently, because that is a hot topic at the minute, where clients need that additional time to kind of sell those properties. They don't want to be paying extension fees and higher interest rates on the current product by going over term. So they need to refinance them. And obviously with those comes lower LTVs, because obviously to build a property and what the property is valued at the end, the LTV is always lower. So that kind of thing seems to be marketed quite a lot at the minute. I'm seeing a lot of that a lot of the hot topic around development exit.
Okay, thank you. And Paula?
Yeah, I think there's lots of opportunities, particularly what we're seeing a lot of is refurbishment. So we're being given a property where there needs to be quite a bit of work done to it. I've had one I see in this morning, which I discussed with the broker last week, where it's a property the client's bought, run out of some funding, he paid cash for it, and it's just about got a roof and windows and doors on it, but there is quite a little bit of refurb to be done on it. And for us, that's something we can consider, and we're looking to lend at 60% on that because of the amount of work to be done. Also, we're seeing quite a lot of auction purchase stuff, so I think a lot of clients are going, there's some deals to be had. Unfortunately, maybe because of the certain situation, there's a lot more properties going into the auction market, and that creates a great opportunity for clients as well. And the key, as I said in the presentation for the auction stuff, is to have your funding in place before you go. And that's, again, something, working with yourselves and a good lender, you can have that funding arranged so you've the confidence of the purchase.
Yeah, perfect. I was just making some notes as we went through there. So probably the two big takeaways then for the brokers watching are certainly the speed of the transaction, that we're seeing stories of some of the high street lenders being 16, 17, up to 19 days to assess applications. We've got a looming stamp duty deadline, which feels a long way off in March, but in practical terms, obviously we've got Christmas coming up. It's not going to be long before we're getting very close to that period. So speed is certainly a big one, and the second one would be refurbs. Either exiting a development, finance it's been done, or turning a property into something else. I think even the recession back in 2008 showed that people still want to buy property. People still want to make money from property and still want to convert properties. And I don't see that changing now. And if anything, people are looking at this as an opportunity to go and buy more or change something into something else. So certainly how to market these to your clients, it would be looking for those landlords that are looking to expand their portfolios, or it would be looking for those transactions that are stalling or maybe time sensitive. I think you can pick up a lot from there.
It's like when back in the day when people used to just, we'd get inheritance and then just put it in the bank and keep it there. But now when people get inheritance and things like that, they're looking to invest it. Now the least form of risk would be property, but with the greater yield. So as I said before, it makes sense. And that's what we're seeing a lot more of, is people, instead of just getting 100 grand, 200,000 inheritance or whatever it is and putting it in a bank or stick it under the mattress, it goes into something that's tangible, that's there. You can drive past it, you see your money where it is. It's physical, and I think that's what's whetting everyone's appetite at the minute.
Excellent, thank you. And then I think we've covered all the questions that are in there. So thank you to everyone for putting your questions on. Just one last message from us before we finish. We're currently saying to everyone that making every day count is really important currently. So we had a couple of deals that should have paid out on Friday. The firm of solicitors that needed to receive the originals in order to complete shut their offices on Thursday night due to having 3 positive COVID tests. And there was no contingency plan for these original documents landing. So completion rolled over till Monday. Obviously caused the client a stressful weekend trying to ensure that everything was still in place and things didn't fall out. That case could have completed a week before, but things didn't move quickly between various parties. So for us, let's not wait until the very last moment in order to send documents in or to send that last item. Let's make every day count. Let's make sure that we're making the most of this period. This could be the new normal for us as long as it's going to take. And working with lenders like the ones you've got on screen at the moment, there are some excellent opportunities out there to keep business churning and keep your clients happy. So for me, massive thank you, Paula, Wayne, Paul. Really informative presentation today and excellent answers to the questions. And obviously, if you've got any further questions for these guys, let us know and we'll pass them on. If you've got any inquiries or cases to send to, then we'd be more than happy to place them with these lenders for you. So from me, thank you to everyone and hope to see you on the next webinar.
Thanks.
Thank you
very much. Cheers, everyone.
Bye.
Bye.